Yeah, who knows? Well, one thing we do know is that DMart numbers weren't as expected. I mean, I would say if you want to look at it in a slightly nuanced way, then all right, the revenue numbers have grown. Perhaps the worst is behind them in terms of the prahar or the kind of attack of quick commerce that they've seen. The discounts are getting deeper, which is what has impacted margins. So a thumbs down overall to DMart because of the kind of numbers we've seen. Avenue Supermarts reported its Q3. Revenues have met estimates, but EBITDA and PAT has missed estimates. Margins are under pressure due to intense discounting. Naval Nirhona has stepped down as CEO, but Anshul Asawa of earlier in HUL will be taking that position. So one management take there as well, change there. Their like-for-like growth has improved to 8.3% versus 5.5% in the second quarter. But the increased discounting impacted revenue per square feet. DMart's ready revenue was up 22% as well. So that's where there's a bit of a pain point. A whole host of notes today coming in on DMart, and we'll get Mahima in a short while to give you a sense of what brokerages are saying. But largely, while brokerages are saying that perhaps the pain might be behind them, the fact is that the impact of quick commerce has been nibbling away at DMart, and that might continue. So maybe a little bit of pain for Avenue Supermarts today. PCBL is the other one, and the reason I picked PCBL because look at the run-up in the stock over the last 1 year. This has been firing, but their numbers have been, I would say, less than exciting. Revenues are up 21.4%, EBITDA is up 14.1%, a bit of a squeeze in margins at 15.8% versus 16.8%, and profits have come down at 93.1 crores versus 148 crores. So 37% drop there. Key highlights of these results: the export volume growth has slowed down due to excess inventory stocking by clients, particularly in Europe. So, I mean, if the management does speak to us, I suppose they will argue that this is a temporary phenomenon. Domestic customers have also deferred some purchases to Q4 in anticipation of correction in prices. Realizations have been lower in this quarter compared to the last, led by 6% correction in crude oil prices during the quarter and decline in freight costs from the peak of July to August. The aquafarm business has also come under pressure because of competition from China and tepid demand in the US. Remember that they acquired this business, the aquafarm business, in November of 2023. Now, why has profitability gone down? PAT has plunged due to poor operating leverage and higher interest and depreciation expenses. So 2 thumbs down from me, last one, a thumbs up. Just because this was something that the company was waiting for. We spoke to Biocon Biologics exclusively earlier last week, but the FDA classification that they have got for their facilities in Malaysia was something that was awaited. These are insulin facilities in Johor Bahru. They've been classified as voluntary action indicated by the FDA. It follows an inspection conducted from September 15 to 27th, 2024, and they were waiting for this. So VAI is the second best classification, and issues found during inspection are not severe enough for regulatory action. So you'll see some relief maybe there, perhaps a bit of a relief rally. In fact, I would say that if in a market like this that is so bearish, maybe you are going to go defensive and look at pharma and maybe some, I don't know if consumption makes that cut now, but yeah, maybe some of those.
Maybe some of those, yes. Now, one of the stocks that I want to point out, and we don't have graphics for that, but pull up IndusInd Bank, and you want to keep an eye out for that one, because apparently the December shareholding as it has come out points towards the MSCI weight going up with expected flows as per one of the brokerages of about $200 million. Remember, this happens in the Feb review, but the market tends to discount it. So maybe not today, but over the course of the next few days, at some point of time when the market stabilize, from amongst the banking names, this one could be the first ones to keep an eye out for. Might see some bottom fishing. Keep in mind, it is available, if everything goes okay, at less than 1 times price to book FY26. There are not too many private banks which are available at such valuations. It's of course out there for a reason, but now that the weightage goes up, the valuation is in favor, you might see some buying out there. So that's the first one on my radar. No graphics for that, but keep that in mind. The next one is Oberoi Realty. And that's an interesting one because it has gotten an appointment as a developer of Mumbai's land from Slum Rehabilitation Authority. This land parcels in Bandra reclamation amount to about 10,300 square meters. That's a large parcel of land which Oberoi Realty has gotten to develop. And now, of course, on a day like today, it might not show the reaction that it would, but otherwise it's a large one. It's a big win for Oberoi, and therefore you might well see this stock getting shored up at lower levels. So bear in mind, this could be an interesting one to monitor in the session today. And I want to mark life insurance stocks maybe because that's the third set of stocks on my list, LIC, HDFC Life, etc. Because the December premiums weren't the strongest. In fact, HDFC Life December premium was down about 5% YOY, and LIC December premium was down 41% YOY. So watch out for these as well. On a bad day, bad data, very likely that these stocks could react negatively, particularly LIC. So watch out. This is 2 months on a trot now that LIC hasn't had good data coming out. So keep an eye out for this.